Hi, everyone. I'm Steve Dietz, and I'm here with Greyson Geiler. We are the co-founders of Andorra Capital and co-managers of Goldrush Yield Fund. Our strategy utilizes gold and silver denominated leases and bonds designed to generate yield that is actually paid in metal. Because this is an evolving and somewhat unique area of the market, we're putting together a series of short Q&A discussions around these questions we hear most often, from how these markets work to how strategies like this may fit inside a diversified portfolio, and why we take a long-term view. Feel free to leave questions in the comments below, and we'll try to work through them in future discussions. Hey, Grayson, how you doing?
Good. How about you?
Doing all right. One of the things we kind of wanted to dive into in this Q&A, because we get a number of questions about this, and let me put some history to it first, because we kind of lived through it. Going back to the 2008 housing crisis, um, post post that debacle, there's been quite a movement in the portfolio construction world to do some diversification of the dollar. Whether that's getting into gold and silver or other types of hard assets that are outside the United States. But it also prompted the actually the invention of Bitcoin and the
Mhm.
cryptocurrencies that follow. Um, so the question I get a lot regarding our fund and using leases and bonds and just gold in general is how does how do they all fit together with the cryptocurrency movement? Why does is crypto replacing gold as a portfolio allocation, or just how it all fits together? I was just kind of wondering if you would like to tackle that a little bit and
Yeah, let me start with just Bitcoin rather than crypto in general, because these are crypto is kind of like talking about stocks. Well, there's Apple and then there's Enron. So let's just talk about Bitcoin specifically. And I get this question a lot too. I mean, you and I'll get that question together and independently. The thing to understand is Bitcoin is not and will never be a monetary system. And the reason I say that is because there's no interest rate to Bitcoin. What is a monetary system? A monetary system distributes purchasing power throughout a populace, throughout an industry, throughout the world, whatever it may be. And it does that via an interest rate. So people can borrow when they've got great ideas but no capital, and they can lend when they've got capital but no great ideas. And the instrument that manages that is an interest rate. Well, there's no interest rate in Bitcoin. And I'm not talking about, oh, if you deposit your Bitcoin, then we'll do some other financial engineering and pay you. And that's not what I'm talking. No one is borrowing Bitcoin. And let me think about it like this, Steve. If in 2018 or whenever Bitcoin was $3,000, $5,000 a coin, what if the only source of capital you could get was Bitcoin? So you borrowed Bitcoin and you bought a house with it. Now you owed however many Bitcoin the value of your house was. You are now insolvent. There wasn't an interest rate along the way. There's no way for Bitcoin to be a monetary system. It is a speculative asset. Now, there's a lot of other characteristics of it. I get it. It's open ledger. I get it. You can send purchasing power around the globe. It's a non-corruptible currency. I get all these things, but it's not going to be a monetary system. Does that make sense?
yep.
And so from that perspective, the Bitcoin and gold are two completely different things. There's a natural interest rate to gold. I have a pile of gold. Well, gold miners that want to mine more gold would much rather borrow in gold terms and pay an interest rate in gold terms, because that's going to be their income. If they borrow in dollars and produce gold, well, now they've got a price risk and they don't want it, right? So there's a natural interest rate to gold, and it's not just gold miners. That's the obvious example. So when you think about gold and Bitcoin, you certainly shouldn't think of them as perfect competitors for each other. If you like them both, buy them both. I hope that helps.
It does, and I struggle over the years too, just with the whole idea of Bitcoin being it's a ledger, and I have a hard time pegging a valuation to it. It's a ledger
Yeah.
that says that okay, two people made a transaction between each other, but I have a hard time putting a value on that ledger entry. So
Yeah.
I understand there's more to it than that with the value of the uh, of the decentralized network and that kind of thing behind it,
Yeah.
and, uh, and those types of
Well,
things.
let's talk about it from a different perspective then. Let's talk about, I don't like the concept of trying to make a monetary system out of Bitcoin. It's absolutely impossible, actually. But what is the core competency of Bitcoin? Think about it. In that post huge meltdown world of 2008, Bitcoin sprung up because you could simply press a button and send purchasing power all across the globe. No Swift codes, no banking intermediaries, no 72-hour settlements, no wire fees, no currency conversions. You just sent purchasing power around the globe instantly through the internet. That's cool, right?
Right.
Throw in the open ledger, and it's not manageable, controllable by a central bank, and it gets even cooler. So I get it. That concept is awesome, but it is not proprietary to Bitcoin. So if you think the network, because Bitcoin was first to market, you think the network it put together, the government entities, we've got El Salvador and we've got other government entities and banking institutions, you've got BlackRock in there building ETFs, so there's always going to be a constant bid. You've got Michael Saylor aggregating Bitcoin, so the demand is going up and the supply is going down, or the supply is limited. You know what I mean? So the value is going to keep going up. Okay, I get it. I could be devil's advocate, but I'm not going to spend time on our podcast doing that. I'm fine. It's a speculative asset, and you may crush it. But what's really different is now that the stable coins have come out.
Right. I was just going to ask you about
So
that. That's kind of the next iteration here. But
yeah,
it's still a cryptocurrency, right? It's still blockchain,
it's still on the blockchain.
but it's somehow attached to the U.S. dollar and the U.S. treasuries.
Yeah, well, right. So there's a little something different. I mean, Bitcoin's on the blockchain. Stable coins are on the blockchain, but they're backed by something outside the blockchain. So now you've got an iteration that could be corrupted, right? Essentially, what a stable coin, let's use Tether, because it's the biggest of the $1 stable coins. Steve Dietz, you could wire Tether from your American bank account, Chase, to their American bank account, Bank of America. They have your 10,000 US dollars. They're going to issue you 10,000 tethers. So it's a 1-for-1. They're backed by dollars. But now you've got counterparty risk. What does Tether do with those dollars? Are they chartering jets and scuba diving and having a lot of fun? Well, the Genius Act is making them buy treasuries with the bulk of these dollars, keep them on account, have their balance sheet constantly audited by one of the big five. So there's security measures in place, but there is counterparty risk. But the important point is, look, you've taken US dollars out of the banking system now and put them on the internet. Now, you and I, as Americans that aren't, typically buying crypto, is what a lot of people use that for. You and I, as Americans, that doesn't really move the needle. If I lose a bet to you and I owe you $100, I could PayPal you $100, instant settlement, right? I could Venmo you, I could Zelle you, but that's all through our banking system. But by the same token, the same utility is there, so you and I don't really care. Oh, but hold on. What about the some 400 million sub-Saharan Africans that have a cell phone, a smartphone, access to the internet, thanks to Elon Musk, and no bank account. It means something to those people. All over the third world, there are those people. And the demand for these stable coins, US dollar stable coins, is rocketing. The Japanese have built their own yen-backed stablecoin. Nobody's using it, but they have one. The Eurozone, they've got their euro-backed stablecoin. Nobody's using it, but so that's one of the things that, in some of my other videos I've talked about, where right now that's at least a breeze in the sales of the US dollar. We're talking about, I think it's somewhere around 30 or 40 billion a month and growing rapidly is going into these stable coins, dollar for dollar. Ether's the 16th, 17th largest holder of US treasuries already. So it's rocketing. America's got a funding problem that's a little more serious than 40 billion a month. But it's at least a breeze at the back of the US dollar and maintaining our world's reserve currency status. The Chinese have no answer for this, none. Gold's doing what it's doing on a completely different side of the monetary system, and it's always going to keep growing. The US dollar is going to keep getting devalued versus gold and silver. But versus the other currencies, I see the de-dollarization that so much of the financial media is talking about. And yeah, there's obviously some of that going on. Trading going on for crude oil not denominated in US dollars. We're losing the petrodollar. Yeah, there's some of that going on. But there's also a dollarization going on through these stable coins. Time will tell which is more serious, but at least the US dollar has some breeze at its back.
But to me, the stablecoin seems as much just another avenue to use the US dollar versus the blockchain trying to be its own separate entity. Like I don't necessarily view stablecoin as being its own currency. Do you see it that way as well, or?
I do. I see the usage of the tethers and the circles and these other guys. And by the way, they're digitizing gold as well, a lot of these technology companies, so that gold can be used in transactions. But the trend is your friend, and the entire world is used to valuing things in dollars and making payments for things in dollars. And I don't see that falling off a cliff to, again, it's not going to happen to Bitcoin. I think, and Bitcoin's by far the biggest of the non-stable coin cryptos. So I agree with you.
And I hope this isn't too much of a tangent. I have found one of the more interesting things about the stablecoin setup with the what do you call it? The fact that they have to buy U.S. Treasuries.
Mhm.
Well, that interest from U.S. Treasuries does not get passed on to the holder of stablecoins.
That's right.
That interest goes to Tether, or
That's right.
it's so.
Tether made 10 billion in 2025, by the way. Smart guys. So two things on that. I mean, there's a fight with the banking system versus the crypto guys. And keep in mind, Chase Bank put their own cryptocurrency together, for international trade, so they can start skipping the Swift code game as well. So nobody knows exactly how this is going to go, but the banks don't want the crypto world to be able to pay out any of the interest, because then they lose some of their grip on the whole. It's the Clarity Act. So keep an eye on all this stuff. Nobody knows exactly how this is going to roll out. But the most interesting thing that who's going to pay what at interest to who on the dollar versus crypto game. Really interesting is the interest coming on the gold side of it. The entire world is reawakened to gold is your storage of purchasing power. The obvious next iteration is, well, can I get an interest rate on it? And we're there. I mean, we are on the cutting edge of this. Our fund, the Goldrush Yield Fund, is on the cutting edge of this. And the digitizing gold crypto guys are starting to wake up to this as well. They're coming in for an interest rate on their digitized gold. So this is going to be, things are moving really, really fast. So it'll be really interesting. Stay tuned.
Right, and even I also find it interesting too with the stablecoin guys that the interest that they're getting from treasuries in dollars, oftentimes they are converting to gold themselves
Oh yeah.
and packing
Oh
it
yeah.
away.
I don't want to put that. I don't know for sure what the exact. Let me throw a disclaimer out there. I don't know exactly, but the numbers. I think Tether bought something on the order of $20 billion worth of gold, and bought their own depository in Switzerland, right? So,
My understanding is they reconditioned an old missile silo and
oh, is
have their
that
own
what it was?
repository.
Yeah, and to back to my comment from the last video, if you're an evolutionist at all, gold has survived all of time, and so even these crypto guys are including gold. And I'm not saying that the crypto's terrible or Bitcoin's going to zero. I don't need to get into those wars. I'm just saying gold is money, and that's not going to change. Gold is money, and now you can get an interest rate on it again. How about
There
that?
you go. There you go. JP Morgan himself would like that.
Yeah, for sure. Okay, well, thanks for your time, Steve.
Yep. And
Hope
again,
we can do another one soon.
yep, we will. And again, everybody, if you have any questions either about this conversation or other questions regarding anything else about the fund or the markets in general, feel free to put them in the comments and we'll work them into later discussions. See you next time.